Hello, in this presentation we will be entering inventory items into our worksheet within Excel, keeping in mind what the same transaction may look like in QuickBooks as we go. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First, we'll take a quick look at what this might look like in QuickBooks and then go to our Excel worksheet and enter the data there. In QuickBooks, if we were to start a new company and just enter in inventory items, so say we have inventory items already on hand and we're starting the new QuickBooks file, then we could just go right to the items list and enter in those inventory items, meaning we would not be entering a journal entry, we would just be listing out the inventory, listing the cost, and listing the sales price, and then QuickBooks will, in essence, make a journal entry recording that transaction. So here, for example, we could just say to an accounting software that this is going to be the item name in terms of just a short name. It's actually going to be, these are going to be guitars. So it's going to be an Epiphone Les Paul is what we have. Same description here. Typically we would put in the cost, that's what we purchased it for. And then we'll also put in the sales price, that's what we are going to be selling it for. Cost of goods sold will be the cost of goods sold account that when we sell the inventory item that it will go to. Merchandise sales will be the sales or revenue account when we sell the item, and inventory asset will be the assets account before we sell the inventory item. There will be sales tax when we sell the inventory item, and we have one on hand. So in essence, you're going to use this data when we enter the same information into Excel. We're going to say we have one inventory on hand. The cost is $400, and therefore that would give us the balance of how much we have on inventory. We don't do anything with this sales price yet because that is needed by the system in order to help us generate sales receipts and invoices. But in order to generate what is on the books right now, all we need are the cost, what inventory is on hand, what we're talking about, and how many units we have. So then we have this second unit. This is the item name. It's an Epiphone Standard Pro, 480. We have one of those. Then we have this item here, Epiphone Riviera. It's 440. We have one of those. And then we have the Stanberger Solid Body, one of those. Gibson, we have at 304, two of those. And then 320 Hollow Body, two of those. So that information is what we will then use to see how much we have within the inventory. That's what we will use now to enter the same data into Excel and see what Excel will actually do in terms of the journal entry that is being done by QuickBooks in some way when we enter this beginning inventory data. So if we go over to Excel then, recall that we have our chart of accounts here, information, and we're going to have to enter this information. We're going to need something at least in this inventory items, because in essence we're saying that we have some of this inventory that is on the books that we physically have, and that would need to go on the books for an asset. And we're going to have to do something else with some other account as well in order to remain in balance. So let's go back over and look at our worksheet. We're going to have to back up this information on some type of worksheet within Excel. We're going to use something that looks like this. And this is going to be a worksheet that will help us put in the inventory by item, track those items, and we're going to use the average method in order to track each inventory item. That's what QuickBooks typically uses. We could use LIFO, FIFO, or specific identification. We're going to use an average method here. So in essence, we're just going to enter the same data. So we have the same item number here that we started off with an guitar with the name an ELP, and we're going to say over here in the inventory item that we have one of those and it costs $400, and therefore the total is going to be 1 times 400. That's going to be the amount we currently have that will be on the books, 400. It's important to keep in mind when we're talking about inventory the difference between the units that we have and the dollar amounts that we have, and it's easy to get confused. We're converting the units in essence to dollars. So we have one of these guitars which is valued at $400 on the books. And then the second item we had was this guitar. So we're going to track this guitar as we purchase and sell these guitars. Right now we're just putting the ending inventory in place at this point. So we're just going to say that we have one of those guitars. The cost is $480. And if we multiply that out, of course, we have 480 of this type of guitar in our beginning balance. We're just putting it directly into the beginning balance. We're not recording a purchase at this point because we're going to say that these guitars were already on hand before we started running our books, and we just need to put that information into our books in some way so that we can track it. And so then we're going to have our next item. Note that I'm going to put these in here as of the first of the month. So we're putting them in here as of January 1st. We're starting the new year. And we're going to put this information. We have one guitar at 440. So if we multiply that out, then we have $440 worth of guitarness for this particular guitar model. And then we're going to go down to the next guitar model where we have, once again, January 1st. Ending inventory, one guitar at 328 for a total of the 1 times 328, enter. And note when we do this formula, all I'm doing is pointing to, we're going to say equals, point to the cell we want to multiply times the second cell. And we could just type in the number, but anytime we can use formulas, we are going to use formulas as best we can. And I'll try to demonstrate that as we go. Next item we're going to have on, once again, January 1st. Note here that we have formatted the cell to have dates in the cell. That's why it's appearing as a date in these cells. That's going to be the format of the cells, which can be found if you were to go to the Home tab. You were going to go to the numbers and look at the formatting. There's different date formattings that we can use. We have a specialized date formatting here, but if you wanted to format something within a date, you can use the short or long date in general, and that'll help you out with that type of information. In this case, with this particular guitar, this guitar here, we have two of those at 304, which is going to give us a total of, we're going to say this equals that 2 times 304, enter. That's going to be the 608. And the next item we have is going to be on January 1st as well, 1-1. And we're going to say that we have two guitars at 320. So that equals, we're going to point to the two guitars times 320. And that will give us 640. So the total here is gonna populate for us automatically with this first worksheet. We're gonna have to adjust that as we go. But if we double click on the total, all it's doing is taking each of these cells. We can see the highlighted cells, 400, 480, the 440, the 328, the 608, the 640, that providing us with two. Hello, in this presentation we will be entering inventory items within our Excel worksheet for our bookkeeping problem, and keep in mind how that may differ from us putting that same information into accounting software such as QuickBooks. First, we'll take a quick look at what it might look like to enter beginning inventory items within QuickBooks. Then we'll jump over to our Excel sheet and enter that data into the Excel sheet and see what is going on. If we put in beginning inventory into QuickBooks, it might look something like this, meaning we're saying that the shop has already been in process. We already have inventory on hand. We physically own inventory, and we just need to put it on the books so that we can then track when we sell what we currently have. If we were to use software like QuickBooks, in essence, we would just need to list out this information, and QuickBooks would put that information into our ending inventory in a relevant format and record the journal entry that needs to happen in order to remain in balance. We'll see that process as we put that information into an Excel sheet. So if we put this information into QuickBooks, for example, we're going to list out, in this case, a bunch of guitars we have. We're going to sell guitars and put that information into our inventory items. So we could just have a list here. We'd say this is the abbreviation, the item name, it's an ELP, It's an Epiphone Les Paul, is the full name, and it's $400 cost. That's what it cost to us. We have a $500 sales price. That's what we are going to sell it for. And the cost of goods sold is the account that we will use when we sell the item, meaning when we have an invoice or sales receipt, as well as the sales merchandise. That's our revenue account when we sell the item. This will be more apparent. We'll go over this more when we sell the items. But this is what we would need to input if we were going to put this information into QuickBooks. Then the inventory asset, that's going to be the asset item for the inventory before we sell it. It's going to be subject to sales tax. And we have a quantity of 1. And we put it in there in essence at 12/31/2020, meaning the December before the date in which we're going to start entering data. So we're putting this information right before we actually start entering data, hopefully hoping that QuickBooks will do whatever it needs to do at that point. It'll roll over, and in January, then we'll be at the starting point we need to be at without any kind of messy stuff going on at that time. In essence, all we need in order to enter this stuff into Excel for this time point is going to be, we're going to use the name so that we can have a worksheet for it, and then just the cost of the guitar and how many we have. That will allow us to calculate what the ending inventory is, which in essence is what we're going to put on the books at this point. The rest of this information is really information we're going to use later when we start creating invoices and we start creating sales receipts. We're not actually going to have any sales items at this point in time, meaning our financial statements don't have any of these numbers. They include these numbers that are currently on the books because the guitar has not yet been sold and has a cost, a value to us on the books. So then we have this guitar. We're going to put this name for $480 cost. We've got 1 of those. We're going to put this guitar, an Epiphone Riviera, for $440, 1 of those. We've got this guitar, Steinberger's solid body, $328. We have 1 of those. And then we've got the Gibson, and that's going to be $304. We've got 2 of those. And then we have the Epiphone Hollowwood, 320 of those. $320 cost, and we have 2 of those. That's the information then that we're going to put in to Excel. Here is our Excel worksheet. Last time we left off with just basically a list. We have some of this other information here, but really we just have a list of our accounts. We're going to start entering data now, that data now being the inventory asset. We need to increase this inventory asset, and we're going to back that up by, in essence, some type of subsidiary ledger, some subsidiary ledger to that, meaning a list of the assets that we have and the value of those assets. That, in essence, is what we just looked at in terms of the list of inventory items within something like a QuickBooks item. As we go through this, I'm going to try to point out some Excel here, but I'm not going to go all the way back to the basics. We'll look at some of the cell references. So I might go a little bit more fast for complete beginners, but we're not going to use anything complex in Excel. We're just going to use the sum function, addition and subtraction, and multiplication within these cells. So we'll go over Excel as we do this. This is a big worksheet, but we're not using complex formulas within it. What we'll start with here is we're going to go all the way over to the right, and that's where we're going to have our backup, our subsidiary account for our subsidiary ledger, in essence, for the inventory asset, backing up this inventory asset. So I'm just using the right arrow and going all the way over here. We're going to go past the general ledger. We're going to go past the financials, and then we're going to be over here in our account for inventory. I'm in CE4 in essence. So it's going to go A through Z and then start with 2 letters here as we move forward, going from left to right. Instead of making multiple tabs, we're going to put as much as we can on one tab so we don't have to go back and forth between the tabs, and we can put things side by side that way by hiding items, which we'll do later. So this is going to be a worksheet, a typical type of worksheet we have when we track inventory within a QuickBooks type system. And we could track inventories multiple different ways. We could use specific identification and know exactly which items we have and which we're selling. We would have to have like a serial number in order to do that. So if we sold like a car, we'd have a license number of some kind or a serial number on the car. And we could use first in, first out, last in, first out, or average, which are cost flow assumptions. In essence, that's what we're going to use here. QuickBooks, the on-ground version or the desktop version, uses an average method. Online, typically we'll use a first in, first out method. They're going to be similar in that we're going to make assumptions about the flow of the inventory. We're going to put the purchase information here. Cost of sales is when we sell the item, and inventory item information here in these three tabs. In this case, we're just starting out. This is our first operation, and therefore we're just putting these on the books and just putting the ending inventory. We're not actually purchasing them. They have been purchased in the past. We have them on hand. We're just starting to put them into Excel and actually track them and try to do things right here. And so we're going to put them on the books at this point. So we're just going to list those items out in the inventory over here. So in order to do that, we're just going to put the quantity, the cost, and then multiply them out. So this is cell CN5, CN5. So it's CN and then 5. We're just going to put the quantity, which was 1. I'm going to select tab to go to CO5, and then we're going to type in the cost of 400, tab, we're now in CP5, and we're going to multiply this out. Anytime you do a multiplication or any type of just calculation in Excel, you first have to have an equals, and then I'm just going to point to the cells we want to multiply. We're going to just say 1 times 400, which would be 400, but we're going to point to the 1, which is in cell CN5, and say times, which is the asterisk, and point to the 400, which is in cell C05, and then we'll select enter. Now, if anything goes funny, if anything goes wrong, and you start doing something like this, and you start clicking around while you have a function going, then don't worry, just delete everything that's in this function and start over again. If you select enter, you can also use the undo function. You can't really undo when you're in a cell and you're moving around like this. If you're clicking around, it's hard. The undo function doesn't always work in that case, but you can delete the entire thing and then undo, and then select the undo. Okay, also note that there's a difference when you're on the cell than in the cell. So if you double click on the cell, then you'll be in the cell and you can change the formula. Once you select enter or tab, you're now off the cell. If you go back on it, you can see if there's a formula in the tab in the formula bar here, and if you double click on it, you'll be back in the cell. So that's just a little bit of that, so you'll have to just play with that in order to get more of that information. So we're going to scroll down, we're going to enter the same data. So this was for the first guitar, the ELP guitar. We're going to scroll down to the next worksheet for this guitar, whatever that name was. And note we're going to enter this stuff as of January, as opposed to within QuickBooks, where we entered this information as of the end of the month in December. We can just put it in there in January because we're going to do the journal entry and we know where the other side is going to go. So we'll just enter this stuff in January, the first date of operations, when we put it into QuickBooks. We're going to be over here in cell CN20, and we're going to have one of these, tab, in CO20. We're going to put the cost of $480 and tab. And then we're going to calculate this out once again, 1 times 480 or equals, point to cell CN20 times, which is the asterisk, point to cell CO20. Now we're in the cell. I'm going to select enter to be off the cell, and it will then calculate to be 480. It's also important to keep in mind what units are versus what the dollars are. We may not always put a dollar sign to separate that difference between units and dollars, but we'll try to here just to make that an important case. It's important to note we cannot put inventory on the items, in this case guitars, as we have 2 guitars so far. We have to put it on there and convert it to dollars. Seems obvious, but it can actually be a little confusing. We have to do a conversion just like if we converted currency or something like that. We're converting units to dollars. So now we're going to have this guitar here, and we are on CN31, one of those, and tab, the cost of 440. Tab, we're now in CP31. We're going to do the calculation of 1 times 440, which is going to be calculated as equals point to the 1 in CN30, times asterisk, point to the 440 in CO31, and then select enter. We have the 440. Scrolling down to the next item, here's our next item of inventory. We're going to put that information over here in CN42. We're going to type in the amount of guitars, which we have 1, tab, the dollar amount, which is going to be 328 in CO42, tab, and then in CP42 we'll do the math. 1 times 328 by saying equals, pointing to the 1 in CN42, multiplying, which is the asterisk, pointing to the 328 in CO42, and then once we select equals or enter, it will do the math. Don't select equals there. Select enter, and there is the math, 328. Now we're going to do the next item. We're in this guitar, January 1st. We are in the inventory, ending inventory. We're going to say that we have 2 of those, tab, and the amount for each in CO76 is 304, tab. In CP76, we're going to do the math. We're going to say that that equals, point to the 2 in CN76, times, asterisk, point to the 304 in CO76, and enter. So we get the calculation of 608, and we do this one more time, one more guitar. This is the item name. This is where we're going to put the information in cell CN87. We have 2 of those, tab, amount 320, tab, and we're going to do the math. That's going to equal, point to the 2 in CN87, asterisk or times or asterisk, the 320 gives us the amount of 640. So if we then scroll down, we have the total here. It's going to calculate for us. We're going to have to adjust that as we go. If we double click on that, however, we can see, double clicking on this, that we then have, so I'm scrolling up, all the highlighted areas. So it's the 400, and here's the formula in CP87, plus the 480, scrolling down, plus the 440, scrolling down, plus the 328, plus the 608, plus the 640, and if we select enter, that gives us the 2,896. In essence, this is the backup. This is the number we need on inventory for the guitars that we have. This is the number that will be recorded by QuickBooks when we just enter this data into QuickBooks. We here, however, need to actually record that information in some format. We're going to use, of course, journal entries to do that. So I'm going to select the left arrow. I'm going to go all the way back. So I'm just clicking the left arrow, going all the way back to the beginning of our worksheet where we have our journal entries. Then I'm scrolling up. I'm in column A. I'm scrolling up. So I'm all the way back over here in A4. This is where we're going to select the journal entries. And the inventory is going to increase, and we're going to have to do something else. So I'm going to put the date here of our journal entry, which will be 1/1. And notice I'm just putting 1/1, which it's going to say 2017. Note that we're in 2021, but I formatted the cells just to have the day and the month, so we don't have to worry about the year. And then we're going to put the information in. So inventory is going to increase. Inventory is an asset. We're going to increase the assets, so we're going to do the same thing to it, which in this case is a debit. So I'm going to copy that. I'm on cell AJ7. I'm going to right click and copy it because I don't want to type it because I'll probably misspell it just out of, that's just what I do. And then I'm in B5, right click, and we're going to paste it, not this way, but paste it 1, 2, 3, just the values so it doesn't turn green, just the values only. And there's that. Now the amount, if we remembered the amount, we can just type that in. Well, let's just type it in here. So 2897. We don't need a comma or anything like that. It's just going to format for us once we select enter. I was going to use a formula, but then I was thinking if I changed the worksheet, that would change the formula. So I don't want to use a formula. And then we're going to need a credit. I'm going to represent the credits with a negative number. So I'm going to put a negative 2897. This is going to be useful. So once again, I'm going to put a negative 2897. That once I hit enter, it'll put a comma and it'll put brackets because that's the way it's been formatted. enter. So we have brackets for negative numbers. That also to us means credit. That credit will help us in our worksheet. So it'll make the worksheet easier for us to use. Very useful. I highly recommend getting used to that concept when working with certain types of worksheets. And then we need a credit going to something. And this is something that we don't see in accounting software. We don't really know where the other side is going. QuickBooks would have to just force it to go somewhere. Oftentimes, QuickBooks would put it into something called opening balance equity, but it's just going to force it to go into some account, and we'd have to go basically adjust it. I'm going to put it directly into an equity account, meaning we're going to put it into an equity as if it was invested by the owner. You might be saying, hey, we probably paid for it with a vendor, and we might have a payable due to it or something like that. But we're going to try to mimic the way we're going to enter this information in something like QuickBooks. If we put it into QuickBooks, it tries to allow us to just enter the information, and then it just puts in the other side. So what we're going to do is we're going to just put in the beginning balance to some type of equity account. We're going to put our hours to the owner's equity account. And then we're going to go through the vendors that we owe money to, and we'll put in the opening balances for them as well, including accounts payable for any Epiphones or any Gibson guitars we owe for. And then the other side of that will also go to equity. And that, in essence, is how QuickBooks allows us to enter the beginning balances without knowing journal entries, without entering two accounts. It basically just forces it to happen, and it pretty much works out because if we enter both of those two balances, it'll close out to the equity. So we'll see how that functions when we go forward. We're not going to use an opening balance, however. We're going to put it directly to the equity. So I'm going to copy the equity in cell. What cell is this? This is AJ22. Right click and copy. We're going to scroll back up. I'm going to put that in cell B6. Right click and paste it 1, 2, 3. Then I'm going to indent that by going to the Home tab, Alignment, and Indent. Or you could just double click on it and click 3 times. I might lock some of the cells, which will limit this indent thing. So if that is, then you could just double click on it and space 3 times. The reason I would lock cells is so you don't actually accidentally delete formulas that will mess things up for you and make problems happen. So in any case, now we're going to post this out. And if you don't indent at all, that's okay too. As long as it's in the credit side, that's what indicates that it's a credit. Next, we're going to record this journal entry. So we have this journal entry here. We're going to record it or post it to the general ledger. This is what we don't really see happen in QuickBooks, but we do see it just appear on the financial statements. And this is how that process is going to work. So we journalize the journal entry in the general journal, and then we're going to post that journal entry to the general ledger, starting with the inventory asset, which is the third account down, 1, 2, 3, third account on the general ledger as well. We're going to try to get a little bit fancy when posting this and make this a little bit easier on ourselves, but we'll have to maneuver around a pretty large worksheet in any way we do this. But we're going to use the freeze panes option to make it a little bit easier. In order to do that, we're going to put our cursor on AJ1. So make sure your cursor is on AJ1 if you're going to use this freeze pane method. And then go to the View tab. So note the tabs are up top. You want the View tab. You want to select the View tab. And then the groups are on the bottom. So this is the Show group, the Zoom group, the Windows group. We want to be in the Windows group. And we're looking at the freeze panes within the Windows group of the View tab. Then we're going to select that drop down and freeze the panes. And what that does is when we go back on this way, then we can always see those first cells, A, B, or B, C, and D. And so I'm going to scroll back, and that helps us, that hopefully will help us to see the two screens as we post this over here. We're still going to have to scroll up and down, so we might use some other methods in order to make this easier. In essence, however, we need to be down here in AQ24. So in cell AQ24, I do want to use a journal entry there and journalize this up there. I don't want to hard code the number because if there's a problem, it makes it a lot more difficult to find it. So another trick we can use is to adjust the size of the screen. Mine is currently at 120%. If I bring it down, I might be able to see more of these two items in one screen. So if I brought it all the way down to, say, 90, now I can see this cell and this cell on the same screen. And I could then just say equals in cell AQ24 and point to this item here. And then enter. Whatever method you do, I'm going to bring this back up to 120. You want to have this item here. If you just type it in there, if you have the exact same cells we're working in, you can just type in C5 equals C5 and enter, and it should pull that number over. The reason that's important is because we can then see the link. I can go here, for example, and use something like this or something like this to find that link. If you don't see that item, that's because I have it in the quick taskbars. It's in the formulas, and it's in the formula auditing and these items here. Again, if the page is locked, you may be limited on these items, but the fact that they're linked will allow us to figure things out where something is going. This is going to go all the way to the equity account, so I'm going to turn that off. The equity account is going to be in order: assets, liabilities, and then equity. So equity is way down here. It's going to be in the same order on the general ledger. So I'm going to scroll over, just using the right arrow. Scrolling all the way over, those are the assets, liabilities, equities in blue. Here's the equity account. Actually, we want the owner's equity down here. So we're over here in BH13. BH13. We're going to do the same thing. We're going to say equals right there and point to the credit right there in D6 and enter. And then it'll populate over here. So again, if you could you could just hard code and put it a negative 2897. It would work. However, I'm going to delete it. You want to use formulas as much as possible. So you could just put in D6 or equals D6, and that should work as well. That should pull it over. Now I'm going to scroll back over, and we're using the left arrow. We're going back over all the way to the trial balance. And we can see that that populates on the trial balance as well, meaning this number is coming from what we just entered over here, and this number is coming from what we just entered way over there. So now that's being used to populate. This is what is done automatically by accounting software such as QuickBooks. And the debits being represented as positive numbers here, minus the credits being represented as negative numbers here. I'm going to turn this off. Means that if we sum them up, the debits minus the credits would equal 0. That's going to be a useful formula for us to have. Once again, note that we don't have a debit and credit column in the trial balance. We're just checking to see that we are in balance by saying that debits minus the credits equal zeros. Very useful to do that, so I recommend getting an idea of that use of formatting the debits and credits. And there's no effect on net income right now. Nothing is in net income. And if we were looking to QuickBooks, we would note that QuickBooks would just generate a balance sheet and an income statement, and this GL information would not be there. It would be done basically behind the scenes. If we went to the GL, we would see it. And then we would not see the trial balance being generated. Typically, most people don't look at the trial balance, but it would be made. And then we would use that to make the financial statements, the balance sheet and the income statement. So if we look at that, then this trial balance can be used to just automatically generate the financial statements. So these two numbers then are going to the financials. I'm going to scroll all the way over with the right arrow, all the way over to the financials over here. And what we have so far is just our inventory at $2,897. Total assets then $2,897. Equity at $2,897. Assets equal liabilities plus equity. I'm going to go over here and format that cell. I'm going to go to the Home tab. I'm going to go to the underline and just double underline that. So this and that are equal. And we can also see that there's nothing on the income statement. We haven't done anything to income. And equity here is also, I'm going to double underline that as well, been populated at the 2897. And that's going to be in this case, in the beginning balance. And we see it here at the 2897 over here as well. So in essence, most of the time when we go into QuickBooks, we enter that beginning data, and it allows us to just enter it in such a way so this stuff is just populated as we go. And we'll see that as we go and we enter more data, the difference between how these financial statements can basically be automated when we enter data within QuickBooks, and look more at that automation process as we put the same information into Excel.